Okay, so for this video, I wanted to talk about the 2022 mileage reimbursement rates for business use of your vehicle. So the IRS in December published Notice 2022-03, which updated the mileage reimbursement rates for using your automobiles for both business purposes, medical miles driven, and if you drive for charitable purposes, right? If you're donating your time and your efforts for a charity, you can actually get reimbursed for the mileage. So the focus of this video is on the business miles. The mileage rate per the notice was increased to 58.5 cents per mile, and that is up from 56 cents in 2021. So it's a good thing for business owners and taxpayers, right? You get a little bit more of a deduction. Whether it keeps pace with inflation and rising fuel costs, who knows? But that's the new rate for 2022. So if you're driving during 2022 for business purposes, this is the rate you're going to use. Now, the notice also clarified that the portion of 58.5 cents per mile that's going to be treated as depreciation for purposes of recalculating that basis reduction is going to be 26 cents in 2022. So what does that mean? Well, if you use your vehicle, personal vehicle or business vehicle for business miles, and you take a deduction at the standard mileage rate, 26 cents of every mile is a reduction to your cost. So let's look at an example here, and they'll illustrate how this works and why it's relevant. So we have John here, buys a Honda Civic in 2020 for $35K. He is a part owner in an LLC that's taxed as a partnership, and so he frequently uses his personal vehicle for business travel. During 2022, John drove 3,500 miles for business purposes. So based on that mileage, the partnership is able to reimburse John for his miles, which total $2,047, right? So that's 58.5 cents per mile times 3,500 miles. And that's how we get that $2,047. Now, the partnership deducts this as a travel expense on his 1065, and then John basically takes the cash, and there's no income inclusion for him, anything like that, because it's a reimbursement. So now, of the 58.5 cents per mile, John must factor in this 26 cent per mile depreciation component, right? So if John drove 3,500 miles, business miles, at 26 cents per mile, he's got to reduce his cost basis in the vehicle by $910, right? So 26 cents times 3,500. So what does this look like? Well, remember, he bought the vehicle for $35,000, so he has to reduce his cost basis, right? Your cost basis is what you paid for it, reduced by any depreciation expense. So he has to reduce his cost basis by $910 from $35K to $34,090. Now, obviously, this is all just kept internally, right? I mean, John isn't reporting any of this to the IRS. He's just tracking this basis reduction internally. Now, the reason why this is relevant is because if John were to sell his personal vehicle for the very same price he bought it the next year, let's say $35,000, technically, he has an ordinary gain of $910 on the sale of his vehicle. So he bought it for $35K, he's selling it for $35K. He technically has a $910 ordinary gain because he took this depreciation piece by claiming the business miles. Okay, so it's always very important to track depreciation on the vehicle, whether you're claiming it as an actual expense, so you buy the vehicle through the company, or you have the vehicle that's personal use and you're depreciating it in this manner by taking the standard mileage rate. Now, practically, in most cases, vehicles are disposed of at a cost well below whatever the adjusted rate is, right? As soon as John drove this thing off the lot, it was probably only worth 20, right? That's just the way vehicle depreciation works. So if that's the case and he sells it, obviously his sale proceeds are going to be below whatever the adjusted cost is, so there won't be any gain there. But technically you have to follow these rules, and you can have circumstances where an individual uses a car for so long that they actually depreciate the vehicle down to zero. And in that case, if you do sell it for even a couple $1,000, you do have an ordinary income inclusion. So So that covers the mileage rate increase for business use and that recapture component, the whole depreciation thing. So I hope that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again on the next video. Thank you.